FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue our trading with the market maker series of videos, this one we're going to talk about type 2 and type 3 trading zones, all right? So let's not waste any time and let's just go ahead and jump right into it. There's going to be a very specific zone that we want to trade in because it's going to give us the best possible results. It's going to give us the most clear results we can potentially get. Okay, and that's the goal behind knowing what this zone is for trading. So a couple things that I want to go over before I go into the charts and I show you is we want to analyze the charts to find the best possible trades. So when you're going to trade, you need to make sure that you're going into and looking at each individual chart, okay, and you're trying to analyze them, and essentially you're trying to find the best possible setup, okay? Because for us to be successful trading, we need to be very selective in how we trade, and we only want to trade the best possible setups, okay? We have to do that. To be successful, you have to only trade the clear and best possible setups. So when you analyze the charts, you're analyzing, you're seeing, trying to figure out where you are in the cycle, number one. Number two, what could possibly be the next move that we anticipate, okay? You're not thinking as a retail trader. When you're looking at the charts, you're not looking at them through the eyes of a retail trader. You need to start looking at the charts through the eyes of a market maker. How would you fool retail traders? Okay, the faster you can start thinking like a market maker, the more that you'll be able to trade in a line with them. Okay, and you'll be a lot more successful that way. So another thing is that once you analyze the charts, you need to focus only on the pairs that will provide the best trade. So you take a look at all your 20 pairs, whatever pairs you look at, okay, and once you analyze the ones that are the most clear as far as you know what part of the cycle you're in, you can see potentially what could happen, okay? Only focus on the pairs that will provide you the best setups. If you see that euro pound is just all over the place, you don't know where you are in the cycle, there's no point in wasting any of your time looking at that chart. There are 20 other charts you can go look at and analyze and see if those are potentially better setups. All right. So very important that when you go to look at the charts, you scan through all the charts. All right. Pick the ones that make the most sense. Just use common sense. All right. And just pick the ones that show the best focus or the best trades possibility, and focus on those charts, because those are the ones that are going to make you money. The ones focusing or spending any time on the charts that are not setting up correctly or that you don't understand, you're just wasting your time. Okay, so let's go over to the charts. All right, guys. So let's go ahead and jump right into it. When we talk about type 2 and type 3 setup zones, it's a lot simpler than a type 1 setup, for the simple fact because they're going to develop either at the Asian high or low, and then for a type 2 setup, and then for a type 3 setup, obviously there would develop in the middle of the Asian session. So really, when it comes down to it, you're not going to have the pip difference going above or below, because obviously we're not looking for that. So for type 2 setup, okay, the important thing obviously is that when we look at these types of setups, this being the beginning of the day here, 5 p.m. Eastern time, we know that the Asian range starts and it goes pretty much until 2:33, right? And so the Asian range will go ahead and set its initial high and low of the day and trade back and forth between it. Okay. Now, when it comes to a type 2 setup, what are we looking for? Well, we're looking for price to either be at the Asian low, the initial low, or the initial high of the day, right? So within this parameter that's originally set by market makers on during the Asian session, right? We're not looking for price to fall below the initial low or for price to be above the initial high. We're literally looking for price to stay in that specific zone and price action to happen there, okay? So the pattern, of course, would be something like this, right? This would be the ideal pattern for price, that's going down, or for price that's going up. It would be something like this, right? So something like that. So the trading zone itself, basically, you need to understand about the trading zone with a type 2 setup is not really the higher or low, or how high or low it is, because it's just basically determined off of the initial high and low that's set during the Asian session. The important thing to remember about the trading zone for a type 2 setup is how long it actually lasts. Okay, so this particular trading zone lasts up until 6:30. Okay, and so what we're looking for, obviously, is we're looking for an M or W to form between that time. Okay, that's going to be the best time for it to form. Now, of course, it can form during the U.S. session, so you could have a situation to where price literally doesn't do anything but consolidate all the way through London and then into U.S. session, and you don't get the setup until the U.S. session. That's definitely has happened before, so just be aware of it. But most of the time, from what I've seen doing backtesting, is that the trading zone itself for a type 2 setup goes all the way up to 6:30. And then if nothing happens by 6:30, then the likelihood of the setup happening is going to happen essentially once U.S. session starts. But most of the setups happen between 2 and 6:30 on a type 2 setup. All right, and the rules are exactly the same. We're looking for an M or W. The only changes to that would be if we get a railroad track, a star pattern, or a quarter wood. Then obviously we're not waiting for second leg W or M formation or anything like that. We just take those specific trades. But the important thing is that we're staying within the initial high and low of the Asian range that was created from 5 p.m. up until 2 a.m. in the morning Eastern time. Okay, and then the range obviously is extended out until 6:30 or so for a type 2 setup. All right. Now for a type 3 setup, the only difference to this, because the range actually is exactly the same, it goes up to 6:30 for a type 3 setup. Right now, the only difference to a type 3 setup is that we're looking for price to develop in the middle of the Asian range, right? So we're hoping that price does this for it. This is what a type 3 setup would look like, would be something like this, right? Or something like this. Okay, something that a move basically that happens, goes back up to the middle of the range, comes back down to reaccumulate and retest that middle of the range again. Okay, now same kind of priority is the fact that it doesn't have to be an M or W. Okay, it could be price action that jumps into a star formation. It creates a star formation here and goes down, or it could be railroad tracks as well. The main ingredient to it is that it's happening in the middle of the Asian range. Okay, the same thing with a type 2 setup. The caveat to a type 2 setup is the fact that it's happening either at the high of the Asian range or at the low of the Asian range. And we're talking about the initial Asian range here. Okay, anytime that price goes and moves below the Asian range or above the Asian range, then we're not talking about a type 2 or type 3 setup at this time. Okay, the only time that would actually happen that would actually count would be if we get some kind of a move like this. Okay, so if we get something like that, that would be a type 3 setup, right? Because it's coming back to the middle of the range, reaccumulating, and then going back down. Okay, so just keep that in mind, that if the initial price goes down, but the actual pattern, if it develops in the middle of the range, okay, it's a type 3 setup. All right, so that's really important for you to understand, is that those things could happen. Same thing if we were talking about a the other way around here. So let's say that something like this were to happen. Price moves all the way back up, comes down like this. Right? So as long as price is coming back down to the middle of the range, and it literally is stopped at the middle of the range and goes right back up, that's a setup. That's a type 3 setup. Okay, so just keep that in mind. Type 3 is the only one that does that. Type 2, we're not looking for this to move at all outside of the range. Okay, type 2 is the only one that actually stays within that specific range. Type 3 setups can move outside of the range and come back and create the M or W. Okay, the important caveat to that is just to make sure that it's happening in the middle of the range. Okay, no matter whether it's a type 1, type 2, or type 3 setup, at the end of the day, it has to be a clear setup. Okay, because if it's not a clear setup, we're not taking the trade no matter what. All right, so that doesn't change, and that'll never change. Okay, everything has to be clear before we take the setup. All right, so the trading zone again for type 2, type 3 setup is essentially from 2 to 6:30 a.m. Eastern time. After that, don't worry about it, go to bed. Okay, and then of course, we're looking for a type 2 setup. It has to be within the initial high or low that's set through the Asian range. All right, guys, so that'll be the trading zone for type 2, type 3 setups. Now let's go back and talk about some of the rules. All right, guys, so after looking at the charts, let's go over some things here. So remember that the most optimal Asian range is less than 50 pips. Okay, so if you go up to a chart and you see that the Asian range is more than 50 pips, I would like you to avoid that particular. I want you to avoid that particular chart. Okay, because that's not an optimal Asian range. Okay, an Asian range is best traded if it's less than 50 pips. All right, so keep that in mind. Asian range less than 50 pips. Do not trade a chart that has an Asian range over 50 pips. The moves already happened. Type 2 setups can start towards the end of the Asian range. This would most likely lead to a trade outside of the trading out of the edge. All right, so type 2 setups can start towards the end of the Asian range. This would most likely obviously lead to a trade setup like trading out of the edge. All right, now let's talk about some guidelines. The first one is you want to make sure that every time that you come to trade, okay, so if you come to trade every day, come to trade without expectations. What do I mean by that? Like, come with the mindset that you're coming to your charts to see if there's any possible trade setups, but you're not expecting to automatically see a trade setup. You're not coming with the expectation of, oh my god, I'm going to have 10 different setups today. Come looking at the charts expecting to find nothing. Okay? Because you have to be very, very deliberate in the way you're trading. You don't have to feel, I don't want you to feel like you have to trade every day, because you don't. All right? You don't have to trade every day. Keep that in mind. You don't have to trade every day. All right? The goal here is for you just to make money, enough money to live off of, right? To pay bills, to pay whatever it is that you want to pay off. But in order to do that, you cannot just come in and think, okay, I'm going to trade today, and start trading anything and everything that you see. Okay? You have to trade what's best available for you. And sometimes the best available thing for you to do is to not trade. When you come to the charts, you want to be that sniper. You want to only take the best setups. Guys, if you have, let's say, 2 or 3 trades or 2 or 3 pairs that are presenting you with pretty good possible setups, okay? Focus on those 3 trades or on those 3 pairs, and out of those 3 pairs, see which one is leading up to give you the best possible setup or the best possible trade. Okay, you don't have to take all 3 trades. The most important thing is to take the best possible trade, because at the end of the day, we all want to make money, right? We're doing this to make money. But if you think about money all the time, you're going to start to make mistakes. All right, think about this as you want to come in as trying to make the best possible trades that you can. All right, when you make the best possible trades, that automatically is going to give you what you want, which is to make money. All right. Setups must be clear and obvious. I can't stress that enough. You see me talk about it every time I do a market maker trade setup video. All right. If the setup isn't clear and obvious, you're not trading it. All right. You're not here to gamble. If you want to gamble, just go to the casino. All right. But if you want to trade and you want to win and you want to be successful, you have to trade setups that are clear and obvious. If they're not clear and obvious, you're not trading. You go back to sleep. You go back to whatever it is that you were doing. You're not trading. And the biggest part about it is the psychology part, is that a lot of you feel like just because the market is open, you have to be in a trade. It's like you guys are on Sunday at 4 o'clock in the afternoon. You're already looking at the charts. You're like, man, what's it gonna open out? You know, and it's like, dude, it's Sunday. Like, chill out. Like, there's no reason for you to even be thinking about trading on Sunday at 5 o'clock in the afternoon when the market opens. You know, that doesn't make any sense. Come on, really? Think about that. That doesn't make any sense whatsoever. All right? So don't have that feeling like you have to always be in a trade just because the market is open. Just because the market is open doesn't mean that it's doing anything. All right? If you go back into the charts, and you can look from essentially 3 o'clock in the afternoon until literally like 2 in the morning, that trading period of Asia, Tokyo, Australian, about 80% of the time it doesn't do anything. Go look at them on a 15-minute chart. I promise you will literally see nothing happening. All right, and if there is something happening, it's news related. Okay, some news is coming out for the Aussie or for the yen pairs. You know. But don't be the guy that's like, man, I gotta trade. The market's open. I gotta trade. I don't want to be You have that fear of loss, but you're not losing out on anything. So don't worry about it. Keep in mind that the best trading happens within the first 4 hours of London Open. All right, like we talked about in trading the zone there, the first 4 hours of London, we should get either the low or the high of the day. And that's what you're trading. You're trading the low or the high of the day. That's it. Whether it's an M formation, a W formation, a star pattern, railroad tracks, quarter wood, it doesn't matter. All right. The thing that you're trying to basically trade off is the perceived high or the low of the day. That's it. Because once you identify the low or the high of the day, guess what? You're going to be trading in line with the market maker, while everybody else is trying to trade away against them. Okay? You should write this on a big piece of paper, slap it on top of your computer screen somewhere visually where you can see it. If there is no setup, there is no trade. There's no exceptions. No setup, no trade, no exceptions. Okay? That should be like the number one rule in your trading plan. No setup, no trade, no expectations. No exceptions. No setup, no trade, no exceptions. That's it. That should be rule number one. If there is no trade setup, guess what? You're not trading. And there's no exceptions to that rule. It's black and white. You want to master catching 30 to 50 pips. Okay? If you can master catching 30 to 50 pips every time, then all we're talking about is just adding lot sizes to your trade. Okay? Because if you think about it, it doesn't matter if you're trading 5 pips. If those 5 pips are on a 20 lot, guess what? You're going to make every single time. You're going to make, $600, $800 per 5 pips. So it doesn't matter literally like, oh my God, I want to catch 150 pips at once. That doesn't matter. If you can just catch 30 to 50 pips, we can adjust your lot size so you can make the money that you want. Okay? Start thinking about your number. Everybody has a number. Okay? Everybody has a number that every month they need to meet. All right? And the number that I'm talking about is the number that you need every month as far as money goes to be able to pay your bills and be debt free by the end of the month. Okay, whether it's 2,000, 3,000, 5,000, whatever that number is, everybody has that number. Okay, you need to figure out what that number is. Once you figure out what that number is, you need to go ahead and adjust your trading plan to help you meet that goal. Okay, before you can even think about going for that goal, you need to be consistent. Okay, you can't be consistent unless you practice, unless you backtest over and over and over again. All right. So once you are consistent and you're mastering 30 to 50 pips every time that you trade, then we can start adjusting your lot size depending on how much capital you have in your account. All right. So very important. Find out what that number is at the end of the month that you need to make. And then practice to get consistent in 30 to 50 pips. Because if you can get 30 to 50 pips, I can show you all day how you can make 30 to 50 pips, pay all of your bills. But the first thing to make that happen is you need to be consistent in making those 30 to 50 pips. Remember why you're trading. The most powerful thing you can always think about is why. Everybody has a why. Everybody has a why of why they're trading. Remember your why. Whenever you feel frustrated, whenever you feel like you're losing everything, remember why you're trading. Everybody started trading for a reason, right? Most of you started trading just to make money, or maybe just to make a little extra income, maybe to pay off the car note every month or something. But just remember why you're trading. It's gonna be difficult. It's gonna get hard, of course. If it was easy, everybody would do it. All right? But if you remember why you're trading, keep that in the back of your mind. All right? Keep that as motivation for you. Because you can do it. It's just up to you to make the decision to do it. Greed kills accounts. If you get greedy in this game, you're only going to kill your account. Okay? 30 to 50 pips. That's it. When you start to go over that, you start to make mistakes. Mistakes lead to killed accounts. Don't be greedy. Get your 30 to 50 and call it a day. That's it. Remember why you're trading. Go back to why you're trading. What's the point of you trading? The point of you trading is to be able to make enough money so you're not having to go to work every day, right? That's the goal. So why would you want to hinder that by being greedy? If you can master 30 to 50 pips per trade, then you can have your free time. You can have time with your wife. You can have time with your kids. You can have time with your family. You can have time to go on vacation, road trips, wherever you want to go. But you can't have greed come into the picture when you're trading. You have to understand the rules and just follow them. Just follow the rules. The more you break the rules, the less likely you are to achieve your goal and what you're trying to accomplish. Alright guys, thank you so much for watching the video. Thank you so much for taking the time out of your day to watch it. So thank you so much guys. Leave me a comment, like the video, share the video guys, and let me know what you thought about this video in the comments below. Thank you so much and have a great day. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.